If you've been granted ISO stock options, first, congrats. But knowing when to exercise them is definitely on your mind. From early exercise to exit, I'm covering 5 windows that you may want to act on to exercise your ISO stock options. The first window, and possibly the best window you have to exercise your ISO stock options, is at grant. And that is if your company allows for early exercise. Most likely, you have a super low strike price, and it's probably the same as the value of that stock at that day. So if you exercise, you probably have the lowest cash flow out, and you also have the lowest tax bill because there's likely no AMT effect or unrealized gain that's going to hit your tax return at the end of the year. The second window that I want to bring your attention to is if you're about to do another round of financing. So maybe you didn't exercise early, but you've got some vested ISO stock options, or you still can early exercise, and you've got a pending valuation round, a round of funding with a valuation tied to it upcoming. As we know, whenever we get another round of funding in a startup company, they do a new valuation. Almost always, we're going to see that price go up. So now there's going to be a bigger spread between your exercise price and the value, the fair value of that stock, which could have an AMT effect on you. And typically, the more rounds of funding you do, the higher that price goes and the bigger spread you have. So it doesn't affect how much cash you pay, but it could affect your tax bill. The next window that you might want to consider exercising those stock options is if you hear rumors or know that some type of liquidation event is coming in the next 12 months. Why does that affect your exercise window? Because if you have vested stock that you've vested and been granted for you more than 2 years ago, and you hold and actually own the stock, meaning you've exercised it for at least 1 year from when you sell it, it's now treated as long-term capital gains. And so you might be setting your future self up for a lower tax bill if you exercise and hold that stock within 12 months so we can make it a qualified sale when we sell it and pay long-term capital gain rates instead of ordinary income. Now, I don't want you to overlook the AMT, the alternative minimum tax impact, because that can make the waiting game for the long-term capital gains not as great on your tax return, because if you exercise your ISO stock options and you don't sell them in the same year, that spread, the differential between your price that you pay and the value of the stock goes into your alternative minimum tax calculations and can give you a big tax bill without you really knowing it's even coming. If you've waited a while and you haven't exercised, and now you've got a larger spread between your exercise price and the value, possibly the next window that is a great opportunity to exercise is in a high income tax year. So if you already have a year where we're going to see a large taxable income due to salaries, bonuses, you could have, maybe have sold a house, or maybe you've exercised some NSO stock options that hit your top line above the line on your tax return. High income tax year, you can exercise some of those ISO stock options that might have a big spread, because the alternative minimum tax effect from that exercise, you have more wiggle room if you have a higher tax income. It's not going to actually go over the limit, and you'll just pay tax on the already taxable income you're going to incur, and hopefully avoid that AMT beast that sneaks its head in an ugly, ugly way on your tax return. This is a really great time to strategize and run numbers with a tax advisor. I've done this with numerous clients this year, where we're seeing how much of the NSO stock options we can exercise. So it brings up our taxable income, so that when we exercise the ISO stock options, the alternative minimum tax is not going to kick in. The last window possibly for you to liquidate is during a liquidation event or merger. So it's probably the lowest risk for you because you're not buying into stock you can't sell. If there is a pending merger or liquidation event, there's likely some kind of deal that's already been bartered in place for how your options are going to be treated. most likely the company is going to cash out those options or force exercise sell those options for you at that event. And it's simply just going to be reported as ordinary income. So at least there won't be AMT on those exercises. And you might leave with some nice cash in your pocket at the end of the day, but you're probably going to pay the highest tax rate as well. I'm curious if you have ISO stock options. When have you exercised? Comment below and let us know if there's any windows where you took advantage of that I didn't cover in this video. If you found this video helpful and informative, ring the bell. I'm Julie Merrill. I'm a CPA, and I'll see you next time.